Hey everyone, welcome back to Elevate, the largest investment banking, private equity, hedge fund, venture capital career platform in North America. Today we're thrilled to have on Oaktree Capital and an incredible set of speakers for a full session on buy-side and credit careers and recruiting. So we're joined by wonderful investment professionals from Oaktree who will all do their intros in just a couple of minutes. It's just going to be an incredible session, right? Oaktree is one of the largest asset managers and investment platforms in the world, 170 billion of AUM, founded by legendary Howard Marks, and the list goes on and on and on. And I'll let the guys explain sort of what all they do. And it's going to be an incredible session. So I'm Kashyap. For anyone that's new to the Elevate platform, my background, obviously, the last 8 years or so, I've spoken to most of you guys on campus. Here's my LinkedIn for anyone that wants to connect who hasn't already. Obviously, I've seen a lot of folks here on campus. My background, 8+ years in private equity. I started Goldman Sachs and Madison Bank, switched over to private equity. I've done about $200 billion of M&A, both on the buy side and sell side. Also did a bunch of, obviously, leadership roles at GS, chief of staff, recruiting lead, etc. Founded Elevate a couple of years ago. Also, in addition to the buy side stuff, today's the largest kind of fast growing recruiting platform. We partner with a lot of the top firms in the world on their talent and diversity initiatives, across North America, all the way from analyst or intern analyst, all the way to post MBA folks, across large cap PE, across technology buyout, upper middle market, growth equity. So, top 5 MBAs, investment banks, and all of that. So, obviously, a lot of these events will be happening over the next few months, whether it's info sessions or recruiting events or closed list events and things like that. So definitely be in the loop for everyone who may not already be. Obviously, Elevate, for those that don't know, largest platform analyst through partner. We partner with about 100 clubs across North America, and on the undergrad side, and about the top 15 business schools on the MBA side. We are also the official training platform provider for all the top 15 MBA schools. And since 2020, we've impacted or had on about 100,000 professional students in all of these different events. So super excited about that. We also did launch this invite-only networking platform. I'll preview that in just 1 second, which has been really exciting to kind of have professionals connect with other professionals or incoming professionals and so on, or students. Definitely check that out. I'll show you how to do that. Today, today's audience, I guess, by percentage on the university side, you see on the undergrad side on the left and the MBA side on the right. We do have some MBAs as well for our panelists who might be interested in credit careers. On the left, you'll see it's investment banking, private equity, consulting, corporate strategy, generally asset management, hedge fund is the breakdown. On the right, you'll see diversified across different classes. Like I said, we selected about 150 people across 50 universities, and really strong diversity, right? 80% diversity of some kind and 55% diversity of underrepresented minority. I would love to introduce our Oaktree team. Tejas has been instrumental in setting this up. I think I've gotten to know Tejas over the years, an incredible mentor, incredible leader here. And I'm super excited to have on Horl and Matt as well, who I know are also incredible mentors and leaders in their own right. So if you don't mind, guys, if you can kick off with your intro, and today's all, the whole session's on credit and buy side and careers and recruiting and all that. So Tejas, why don't you kick us off? And then Horl and Matt, I would love it for you guys to give us an intro of your background and kind of what brought you to Oaktree and sort of what are the stuff you work on there. So I'll pass it over to you.
Yeah, no, thanks for the introduction, Kashyap. And everyone, Kashyap is an unbelievable resource. Given his background and what he's doing on the platform, I think I was watching his videos and following him and listening to his podcast when I started banking, as soon as he started, and the platform has really developed. So appreciate you having me on, Kashyap. So I think to start, one, maybe I'll talk high level about Oaktree, and then two, I'll just introduce myself, and I'll let the other guys introduce themselves as well. But really think about Oaktree as a holistic alternatives asset manager. So I think we're around 70-75% in credit, and the rest is real estate, private equity, and listed equity. So we do a number of different strategies. This call is going to be focused on credit, but Matt is obviously coming from special situation side, so we can really talk about a lot of things in the investing world that you guys may have not seen before, especially if you've mostly heard from private equity speakers. So I'm Tejas. I went to Emory. I studied math and economics, graduated in 19, did investment banking at Wells Fargo in a niche product group. And then I was at Moelis, where I was a generalist. And I think for me, it was always about looking at interesting opportunities, interesting deals. And, based on my understanding, based on the people that I was talking to at the time, If you wanted to work on a lot of different companies, a lot of different industries and see a number of different business models and economic models, you could either move early cycle, to venture growth, and then you could be competitive there, or you could move up in the cap stack to credit, preferred, unsecured, something like that. Private equity, just general buyout is very, very competitive. So it really, really helps to have some kind of edge or some kind of a spin, that it helps with fundraising, it helps with investing process. A quote that, I heard the other day that I thought was pretty good is anyone can buy a company, you just need a bit more than the next guy. But what you do with the asset once you've acquired it is where the return comes in. So I've been at Oaktree for about 8 months in strategic credit. That's a hybrid public and private credit focused investment group, and have really enjoyed it so far. Team is great. The culture is tremendous here, and I'll get into more of that later. But yeah, I've had a good experience so far. Carl, Matt, do you want to intro yourself?
Yeah, I'll hop in here. Thanks, Tejas, and thanks, Kashyap, for having me. By way of introduction, my name is Carl Jean-Pierre. I'm from New York originally. I attended Fordham University for undergrad, where I studied finance with a concentration in value investing. Had a couple internships during undergrad, namely in capital markets and in private credit. Started my career in investment banking at Credit Suisse, where I was in the leveraged finance origination and restructuring group. So I was there for about 2 years for my analyst program. And then, like Tejas, started here at Oaktree in August. So at Oaktree, I sit in our mezzanine strategy, also known as our US private debt group, which is, you can think of it broadly as private credit investing across the capital structure. So our team focuses on junior debt, which ranges from second lien loans to subordinated notes, all the way down to common equity. And then we also do play in more of the unitranche and first lien part of the market as well. And basically what we do is we essentially help private equity sponsors buy companies. In the most vanilla LBO sense, private equity sponsors need to borrow money to buy companies. They can either go to an investment bank to get that capital, and they can use the broadly syndicated loan market, or they can use an alternative lender like an Oaktree, where we will essentially provide that privately negotiated financing. So we can talk more about the strategy and what it is that I do, but looking forward to getting into it over this session. So.
Hey guys, good to meet everyone on the call, and thank you for joining today. My name is Matt Jones. I'm an associate on the special situations team here. Like Tejas and Carl, I joined roughly around 8 months ago. I came from Citigroup, where I did investment banking, specifically in the diversified industrials group. And I think one thing that really stood out to me when I was doing my banking program is it was a time period where we were doing a lot of SPAC deals, whether that was a D-SPAC acquisition, D-SPAC transaction. And it was a time in the marketplace where it was very much growth thinking and growth forward. And I was staffed on certain projects. I thought, some of these businesses may not even generate revenue until 24, 25. And it kind of challenged the way that I was thinking about being an investor and really wanting to focus more on the value-oriented side of the buy-side space. And I also wanted to be in a group that really had an agnostic strategy and was a bit opportunistic. And I think something that's unique about the special situations group is that we fully invest across the cap stack, ranging from equity all the way up to senior term loans with an opportunity to maybe structure the deal with some equity warrants. But generally, our group is focused on generating private equity-like returns using kind of a myriad of different products. And like everybody else on the call, I'm happy to dive deeper into that.
Great. Thank you guys for that intro. We are going to do that right next. So thanks, Matt. Thanks, Carl. Thanks, Tejas, for walking through that. By the way, there's like over 100 people in the waiting room, so we try to let as many people in as possible. So let's kind of dive in here, guys. The first topic I want to talk about is like the overview of the various fund strategies. You guys have already previewed to an extent. Obviously, Oaktree does a lot of things, but specifically within your investable universe, maybe what are the types of investments? What would be like a perfect investment so that our audience, kind of professional students can get a better sense of the types of deals you work on and what are you looking for in those deals? Tejas, do you want to start?
Yeah, sure. So maybe I'll give the high level and then talk a little bit about, my strategy. So Oaktree overall, you can think of as like 70 to 75%, credit oriented. The largest strategy on the credit side is our ops fund, our opportunistic credit strategy, which is, historically like a distressed, credit business. They would buy, high yield bonds and loans and public securities that were trading off for some reason where they could extract value more than the value of what they were buying. That was the simplest form of the strategy. And there's a lot of other strategies that do similar things. The ops fund has, a tremendous amount of relationships and, to generate both, public investments, but also, private style investments or bespoke, kind of investments that are off the run and really, kind of add value in that way. Then we have several other strategies on the direct or on the credit side. We have a couple liquid strategies, which are, high yield levered loans. And that's really creating a large basket of bonds, loans, and weighting things, appropriately. So that's a pretty, interesting seat because you get a really broad view of the market, and, double Bs, single Bs, all the way down, as well as different industries. And then strategic credit is private and public investment group. So I think historically the group was more weighted to public. And now it, might be more weighted to private, but we have that flexibility to go back and forth on what we find interesting. The public names and public credit investing does give a good benchmark on barometer on value when you're looking at private stuff. So I found that seemed to be pretty helpful. And then, Carl can talk about Mezz, and we have a couple other, credit strategies as well at Oaktree, but the large ones I've already discussed. And then the rest of the strategies are really fit within Oaktree's, DNA background, coming from credit focus. So, real estate and private equity. And then we have a listed equity strategy, but they all come from kind of a value oriented approach to, valuation, to understanding, to thinking about, purchasing and investing. Strategic credit specifically, like I said, hybrid public-private. And we have a number of PMs focused on different sectors, but the associates are generalists, which is great because it allows you to see a lot of different business models. And then you can, what I find most interesting is, looking at a company, understanding how it really works, how it ticks, and then seeing if I can compare that business model to a business model that might be similar, but in a different industry, and seeing how the valuation compares, how the growth rate compares, how if the competitive dynamics are the same or different. So it's really, really interesting to get that, sort of seat where you can theoretically look at anything that looks interesting and passes the smell test. So
I guess I'll jump in here. So, as I alluded to earlier, I sit in our Mezzanine group, also known as our U.S. private debt group. So what that strategy is broadly is essentially also known as private credit. Private equity sponsors come to us to get financing to support their leveraged buyouts of various target companies. Similar to Tejas, we're a generalist group, so we'll look at all sectors, of the market. And we focus on both mezzanine debt and senior lending. On the mezzanine side, we play in what's called, or what's referred to as, the bottom of the capital structure. So that tends to be either second lien debt, which has a second priority to first lien debt, or subordinated notes, which can also be referred to as a class of unsecured or uncollateralized debt, and common equity, which goes hand in hand with the equity that the sponsor is putting up to acquire a business. On the senior side, we will lend at what's also called the senior or top of the capital structure. And we're providing first lien loans and unitranche loans, which are essentially a blended loan of both first lien and second lien debt. From an ideal investment or bread and butter investment, I mean, I hate to say this, but it depends. I think part of the allure of being a private lender is the fact that you can be flexible and you can be opportunistic. That means that, there isn't necessarily a scenario where every transaction looks the same, that there's a home run scenario. But I think that broadly, there are qualities or characteristics that we look for in an investment that are going to hold true across, mezz or senior, right? Obviously, we're going to want to see a business that produces strong and steady cash flows, a strong management team, and honestly, even working with sponsors whom we trust and who we know that can run and operate a business well, and that we trust to essentially act on whatever it is that their investment ideology or investment thesis is. Because, at the end of the day, you are working hand in hand with that sponsor and you're investing alongside with them. So that's high level what we do. And, similar to all of Oaktree, we really focus on risk control and making sure that we're taking calculated risks and achieving a risk-adjusted return in doing so.
Super helpful. Yeah, Matt.
Yeah, and then I really touched on my strategy, and Tejas brought up another strategy that has a lot of connectivity to ours, which is the Global Opportunities Fund. So the Opportunities Fund historically has been the distressed debt group that sits at Oaktree. It's our largest fund, flagship fund. And I would say that the Special Situations Group crosses over with that strategy on the distressed debt trading side, and then also on the structured equity and structured credit side. But I would say, in addition to that, we also, as mentioned before, will play up on the capital structure, we'll play down on the capital structure. We will kind of go into companies with control positions, whether that's synthetically through structured equity or through just a straight buyout. And I think Carl mentioned this before, but like you said, there just really isn't, I guess, quote unquote, perfect ideal deal. It really depends on where we sit in the cap table, the underlying company, the industry, the management team. But I would say generally, we tend to focus on kind of quality companies that have bad balance sheets.
Got it. Very helpful, guys. The general theme today, and I focused the first third of the session on the strategies and the types of projects that they're working on, right, in each of these different strategies. The second third is going to be on the role of the associate, and so we're really going to, Matt alluded to this, kind of what does the day-to-day look like, what are the types of deals, what is he actually working on, or what are they working on, and then finally we're going to hit on recruiting, which is going to be the third of the session. Because a lot of our audience, especially the bankers who are now recruiting to go into PE, they might be coming from a healthcare group at a JP Morgan or a TMT group at a Goldman Sachs. So they really want to know, how does that industry experience that they're coming in with then fit into kind of more of a lateral view on credit, right? So that might be just helpful for people to understand.
Yeah, maybe I'll start, and I'll just give one element of what I kind of think about when I'm looking at something new or like a new industry. So for me, it's really, really helpful to get the top-down view. So start, let's say I'm looking at a company in the comm space, or I'm looking at a fiber company or something like that. It's really helpful for me to understand how it interacts with other parts of the value chain and how those different pieces are valued, right? So if you're looking at a fiber company, there's probably connectivity to a data center somewhere. There might be connectivity to towers. There might be an element of wireless if a towers company is communicating with your cell phone. So and then there's the fiber itself, the actual asset. So it's really interesting to me to think about what are the companies that play in each of these different parts of the ecosystem, and how are these companies valued? Is it a multiples basis? Is it a subscribers basis? Is it do these companies not have EBITDA and it's like a revenues multiple basis? Is there an asset value that you can think about and maybe look at a loan to value or LTV? So for me, that's the first step, laying out the ecosystem, seeing where my company fits in, because that leads into, competitive dynamics. Is this company an 800-pound gorilla? Is it, doing a commoditized product, but it does it better than other people? Does the business fundamentally have a reason to exist, or does it not really have a reason to exist? Those are all questions I, think about when I'm really starting to look at an industry or a company in an industry. So maybe I'll leave it at that. Obviously, there's a bunch of things we all look at, but that's the one thing that I really try and look for.
Yeah, I think this is also a question that I debated a lot as I went through recruiting, thinking about if I wanted to be a generalist or if I wanted to focus on a sector in specific. And I think, my banking program somewhat influenced that as well, because, I was a generalist also when I was doing lev fin banking. I think what's even, more important, and we'll probably touch on this a little bit as well, is your ability to just apply a credit framework towards a business and towards an investment, right? I think, regardless if you're looking at a healthcare business or, an industrial business or a manufacturer or, a technology business, there are certain competencies and certain things that you want to make sure that business hits first from a credit perspective. And once you have an ability to do that, I think you can, you can get up to speed on that industry or that sector to a point where it'll allow you to make the right or an efficient investment decision. So, obviously at Oaktree, as a generalist, we do tend to have different sectors where we see more volume and more traction. I think in the middle market in particular, you'll see a lot of industrials, a lot of manufacturing businesses, a lot of healthcare businesses. And that's just by nature of the market. And when you surround yourself with people who have been doing this for a very long time, you will learn different metrics or different characteristics of different industries to a point where you'll be able to deploy capital efficiently. So, I wouldn't necessarily be afraid of being a generalist, because there are still plenty of, really efficient pockets of capital that you can put to work. So.
Very helpful. Matt, I don't know if you have anything to add on this.
Yeah, I would just say in my prior banking program, I was in the industrials group, or the diverse industrials, which cross over with a lot of different industries and sectors. And I think that really piqued my interest in wanting to continue to be in a generalist path, because back in my banking program during the morning, as I mentioned before, we could work with kind of a growth-oriented SPAC-like business. And in the afternoon, it could be a big industrial conglomerate or aerospace and defense prime. And so you're constantly working out different parts of your brain. You're looking at different business and economic models. But at the end of the day, I would say in this role, like, your core investment thinking is the same. And I think that's kind of what is the most important thing about kind of being in this seat, regardless of what industry or sector you focus in on.
Very, very good answer, guys. All three of you guys. You're learning so much across different industries anyway, so if you don't feel like you need to focus right away, you can apply those same skill sets. So I think really, really great answers all around. Now let's shift to the second of the three sections of the session. I think we'll focus and drill in a little bit more on the role of the associate and senior associate day to day, as a lot of our people in the audience might be doing their analyst programs in banking or consulting or lev fin or something, and so they're looking to kind of see how that'll transition to being an associate. So maybe help the audience understand like the day to day and what are some of the key similarities and differences between various career options that might be in front of you.
Yeah, maybe I'll start, and maybe I'll just like quickly, and this is just my perspective, just based on the number of friends I have working in PE versus credit versus long short, what have you. I think with my role versus someone in like PE, I mean, I have friends working in middle market or lower middle market where this may not be the case, but generally I've found, associates, when they come into a PE program, are staffed on, 1 to 3 portfolio companies that they're responsible. And there's going to be a lot of like ongoing activity depending on the level of maturity that the company is in. And then, if you're looking at a new opportunity, I don't know how many of you guys are bankers, but, sell side processes and buy side processes are longer than that of like a capital markets transaction. So you either, stage one diligence, stage one bid, stage two diligence, stage two bid, there could even be a stage three. It just depends on the competitive dynamics of the transaction. So the transactions themselves take longer and they're going to take up more of your time because the level of diligence you have to go into to really, really understand the company is quite high to be competitive nowadays in the market. So the difference with my seat is, for example, there's like, 20 or so public names that I cover, a lot of telecoms name, building products names, home builders, etc. And then there might be, one or two private opportunities that you're looking at any given time. And again, I mean, the level of time, varies for each deal depending on the complexity, how distressed the company is, and where your investment is like sitting in the capital structure. But my time is spread out between, more things. And I think on the credit side, I spend a lot of time reading, going to industry, meetings, attending, if possible, like, annual meetings for companies that I cover or we might have an investment in, and going on earnings calls. So, it's different certainly from someone in private equity. I can't speak as much to venture because I candidly don't have that many relationships there, but I'd imagine that their portfolios might even be broader than ours, just because the check size is smaller than the check sizes that we're deploying. So I think those are some things to think about just in terms of like, I think in general, cream tends to rise to the top. So if you're number one in your class in banking, that's really helpful. It may not fully translate to buy side stuff, but generally, just in general, effort and interest in the deal really translates. If you're genuinely interested in the companies that you're working with the management team, the people on your deal, you're naturally going to be more integrated in the process. You're going to be integrated in legal docs. You're going to be thinking about, you're always going to be thinking like, how can I analyze this another way, to really see how I could be not protected, and what can I do to diligence out my fears? Like there's going to be a couple diligence items that you're just going to have to live with because maybe they're secular trends or something of that nature. But if you're interested in the deal, it's going to show in the quality of your work and what you think about. So maybe I'll just cut it off there.
Yeah, I'll hop in here. When you have a lean deal team, which at Oaktree that can range from associate VP and MD to get a deal closed. A lot of the investment analysis and actual deal closing process will fall on the associate. From a day-to-day perspective, my job will range anywhere from, conducting primary diligence. So what does that mean? That means the sponsor has approached us and has expressed interest in submitting a bid for a business or maybe already has a business under exclusivity. And that means, as an associate, I will go through the data room, I will spread financials, and I will, perform a number of analyses that show historical performance, projected performance, and then potentially sensitize that information based on, my own outlook on the business, industry, or sector. And that means I'm, spending a lot of time, in Excel and, or PowerPoint, putting pages together, putting different, forms of models together to assess a business's creditworthiness, and essentially kind of backtest the sponsor's thesis on, why they find this business or sector attractive. On top of that, I might do a number of expert calls where I'll speak to industry experts to learn more about it, to learn more about that sector. So going back to your previous question about being a generalist or being a sector focused person, if I know nothing at all about, pipe manufacturing, I can spend a few hours, that week speaking to a industry professional who's been in that business for 20 years and learn more about that sector. And on top of that, my job can range anywhere from writing investment committee memos to going through credit agreements and different legal documents to do different forms of covenant analyses and the like. Oftentimes, people think that private credit is just doing new deals or financing new LBOs, but at the same time, we're also financing add-ons and, tuck-in acquisitions. And sometimes sponsors come to us with different asks on their portfolio company. Maybe they want to extend or amend the credit agreement. So we have to do some work on that. So, the job of an associate is to be, in the weeds of the business or the new opportunity, to know the business, from top to bottom. And lastly, to really have a perspective, right? And I think that's where the role changes from banking. Now you're expected to be able to formulate an opinion and formulate a thesis, and really speak fluently to that and be able to back that up via your analyses or your understanding of the business or sector. And how it compares to private equity, I think, from a private credit perspective, we sit on the other side of the table. We are investing hand in hand with the private equity sponsor. But from my perspective, obviously, we are more so focused, on downside protection. At the end of the day, we want to get paid back our principal plus interest, right? So we want to make sure that we can get that back and achieve whatever milestones it is that we need to achieve, whereas the sponsor is obviously trying to create value in any way that they can. So we'll work hand in hand with them and do a lot of the same work and leverage each other. But ultimately, we are taking two different perspectives or ideologies on the investment itself.
Absolutely. I think that's very clear, Carl. Amazing answer. I think very succinctly kind of describe the differences between what you're working on and also kind of how you're involved in the deal. Matt, do you want to comment on what are the skill set you think differentiates you as an associate or senior associate at Oaktree, and what advice do you give for our bankers or incoming bankers on the skill sets they should build and then exhibit to excel in this role?
Yeah, and I think it really comes down to the different organizations that kind of the buy side and investment banks are. I think when a new deal comes in the pipeline, or we have a portfolio company that's getting ready to exit, or there's some type of active process that's going on, there's kind of a handful of things that need to get done. And one of my MDs told me when I first started, he said, there's a handful of things that get done. Like, you can do it, the VP can do it, the MD can do it. Nobody really cares who does it. It would be great if the associate does it all, but they just need to get done. And so I think that in itself kind of lends itself to say that the associate has so much ability to play up on the deal team. I think Oaktree does a good job, specifically a special situations team does a good job to help let associates play up, but they won't let them put themselves in a position where they're going to put kind of the deal or kind of meaningful capital at risk. So I would say if you are making a transition on the buy side, try to play up as much as possible. I think that's truly where you get the best experience. On my team, we have positions where we control the equity, control the board. And so we work closely with the CFO, the C-suite. I think kind of maintaining a great relationship with them and acting as kind of an outsourced CFO, biz dev person is a great way to really add value to the team, where the MD, the VP on the deal team may not necessarily have that time because they have new investment work or kind of other pressing matters at hand.
That's a terrific answer. I think just taking ownership, right, of the deal you're on and any project you're being given, and then taking ownership of all the details, whether it's in the model or whether it's kind of the meetings, all of that, it adds up. And I think then building that reliability, Matt, you're talking about, people trust you to run stuff now, and then now you're suddenly sort of leading decisions and directions. You're having more of an impact. So it's like the day-to-day work you're talking about, attention to detail, focusing on the ownership side, and then it kind of translating other stuff. So amazing, Matt. Thank you for answering that. Madison, if you don't mind, I would love to do, if you could do your intro, and then we'll take any questions, and then we'll go into recruiting into credit and kind of what that whole process looks like. What you should be demonstrating, what are the types of backgrounds we're looking for, and all of that. So Madison, off to you.
Awesome. Hello, everyone. It's nice to see so many familiar faces, both in the Oaktree folks that are joining, but also folks that I've encountered either in campus recruiting or my time at Houlihan. So hello, I'm Madison Horl. I lead early talent at Oaktree. That involves recruiting, program management for essentially everyone VP and below. I really love getting the chance to work with the associates once they're at Oaktree, but also work with our talent acquisition team to recruit everyone as part of on-cycle and off-cycle processes. So I'm happy to be a resource for any questions you have, and feel free to connect with me on LinkedIn or reach out after this. I think a knowledgeable candidate is better than someone who's entering the process, blind or unaware. And I know that that's the purpose of this gathering here today. So let's continue that, and feel free to reach out afterward.
Amazing. Thank you, Madison. I think the commitment that Oaktree has, both to talent and development of talent at the junior level, as well as the diversity of experience and backgrounds in hiring, the top talent, is pretty commendable. That starts from the top, on down from the founders, right? So I think it's really a commendable platform and a kind of an industry standard. So thanks, Madison, for leading that. Madison, let me start with you, since you've seen a lot. What are the things that stand out for you? You already mentioned awareness of the platform, kind of knowing what you guys work on, et cetera. Maybe you can start on what stands out to you in the strongest of candidates that interest Oaktree, right, in any of these programs. So there's campus programs or on-cycle, off-cycle recruiting programs.
Yeah, I think Yeah, no, great question. I think, what's already been addressed here today is just knowledge of Oaktree. That's first and foremost. You'd be surprised how many candidates come to us and say, tell me about your firm. We're not here to tell you about Oaktree. We expect that a candidate that's entering our process knows a lot about what's going on. The other thing is being prepared for interviews. And I completely respect candidates who decide to sit out of on-cycle or, enter on-cycle once they're ready for a case. And knowing that a certain type of case is going to be part of your interview process once you engage with a particular team. So I think that's another important piece.
Absolutely. Amazing. Thank you, Madison. I'll come back to you on a few more questions recruiting related in just a few minutes. Before we jump into the recruiting section, guys, Leonardo, do you want to do a quick intro, maybe what firm or university, and then just ask us your question?
Absolutely. Good afternoon, everyone. I'm Leo, and I'll be going to Houlihan Restructuring Group this upcoming summer. My question's for Carl. I was just curious when you mentioned you do primary diligence, and I just wanted to know how that diligence and the analyses you do differ from banking, and kind of what do you do more specifically on that end?
Yeah, it's a good question. There's a saying that the sell side at an investment bank, you're in the moving business, but at Oaktree, we're in the storage business, right? So at an investment bank, your primary job, especially as, a sell side lev fin banker, is to help syndicate deals, right? So you are marketing a business and you are trying to convince investors to participate in the process. So the analyses that you're doing there, right, obviously can range from, a primary model you're putting together, or you're putting together different capital structure scenarios when you're pitching to a client, or once you've already kind of locked up a deal, ideally, you're putting together, a lender presentation or a rating agency presentation, to kind of get a deal done. Whereas on the buy side, right, we are committing capital that is going to be outstanding for anywhere from, 4 to 7 years, give or take. So we want to be, pretty comfortable with the idea that we are going to be holding on to this investment, right? There's no offloading. We can't just call up a trader and sell off our position. So the type of analyses that we'll do, and that you'll see broadly across a lot of different, investment firms, will range from, normal cash flow models to looking at different credit ratios, right? You might want to consider, obviously leverage, but also maybe what interest coverage might look like, or what your fixed charge coverage ratios will look like today at close and over time, right? Obviously, everything can be situation specific. Maybe you're looking at an acquisition financing and you want to look at what the pro forma combined business will look like, and can that combined business sustain a elevated level of debt? Trying to figure out how much leverage is too much leverage, or can this business support any more leverage? And then also maybe depending on the thesis, or depending on our outlook on the industry or the business, right? Maybe we're expecting, one significant sector of the business to become less profitable. Well, how does that impact EBITDA? And how does that impact free cash flow moving forward? And if we take our own opinion on that, what does leverage look like? What does What do our different ratios look like? And are we comfortable with that? If we expect a business to cycle in 2 years for whatever reason, are we still confident that our tranche is going to be, can still be made whole? And how do you get comfortable with that? So we'll run through a different number of analyses and scenarios where we are just trying to get comfortable with an idea or our perspective on the business. And once we've reached that conclusion, then we'll either commit to the deal or we won't commit to the deal. Versus in banking, you are trying to sell a deal to an investor. So your mindset is going to be very different in terms of the numbers you show, how you show those numbers, and why you put those numbers on the page. So
awesome, thank you.
Of course.
Thanks, Leonardo. Thanks, Carl. Great answer. Let's go to recruiting and kind of drill in a little bit more. So I guess I would love to start with what is the interview process like for Matt, Carl, or Tejas? Like what is expected, right? You Madison mentioned the case study, et cetera. How are you? How do you structure your sort of story and your communicator interest in credit or Oaktree, and then sort of what does the process look like? So any of you guys can go, from recent memory.
Maybe I'll just quickly kick off. I think the number one, and I can't stress this enough, is to be specific about what you want. The best thing you can say is kind of, this is my number one firm. I know you don't cover them, but I know you cover this comparable firm. Of your list, I want to talk to these 3 or 4 people because I am interested in, and you give a reason that you're interested in those strategies. That's great, honestly. The worst thing you can say is being very general, and say, I want mega fund. Well, mega fund what? Mega fund real estate, mega fund credit. Oh, mega fund private equity. Okay, what strategies? What industries? What am I going to look bad putting you in front of a mega fund case study? So I think 2 takeaways. One is just make sure you're putting yourself in the perspective of the person that you're talking to and see how they might look at you from their shoes. That's going to make you competitive no matter what. And another thing I always like to talk about is just second level thinking. It's very easy to read and just be able to recite facts. But the second level is thinking why and how does that impact me or my investment or what have you. Like if rates moved up 50 bips, you can tell your MD, oh, rates moved 50 bips. Okay, what does that mean for me? What does that mean to our portfolio's risk profile if we're in a bunch of bonds and we have high duration? Like what does that mean? So try 2 things. Always try and put yourself in the position of the person that you're talking to, and then always think about and it's a hard muscle to flex, but try and think in terms of second level thinking, and that'll take you far in recruiting and just in general.
Great answers on both. Especially the second part. I think, you can prepare for certain questions and then you have to sort of be ready to react to the second, third level types of questions. Great. And so I guess, Carl and Matt, from your guys' end, just on recruiting, right? We covered the headhunter, we covered sort of a little bit of the initial of the process, but how do you sort of, what does the rest of the process look like when interviewing for a credit like fund, right? Are you expected to go through deals and put them in sort of a credit perspective? Like, are you expecting, your prior deals? Are you expected to sort of, talk about potential investment opportunities in the credit space? So maybe give a little bit of sense on, how candidates should think about preparing for an interview at Oaktree.
Yeah, I'm happy to take that. So I went on cycle in 2021, and so my process was very short. I was able to articulate the special situation strategy, what they did, some of their portfolio companies, and then I had my first round interview, and that was with the senior vice president on the team, and he essentially just wanted to learn more about myself, the deals I worked on, feedback that I got during my banking program, what I was looking to get out of an associate program, what interests me in investing, and then kind of your kind of run-of-the-mill technical questions. And so after that took place, I was sent a case study. It was pretty much a sim where I had to build out a model, put in some qualitative detail around why I made certain assumptions, how would I leg into this investment? Would it be as an equity owner or as a lender? If it was an equity owner, how much leverage would I put on the business? So I had roughly around an hour and a half to complete that. And then the second hour and a half, I then presented in front of about 4 or 5 people on the special situations group, where I had a kind of a presentation, and then they did a Q&A and kind of stress tested my model and then some of my thesis.
Super helpful. Very comprehensive, obviously, right? I think the technical skill set, the credit, mindset, looking at a company a certain way. And I think, Matt, I'm sure also got drilled on, you went on cycle, so it's probably a little bit earlier, but maybe his summer experiences and deals that he might have worked on over the summer and, full-time as well. We are going to do a separate, private equity recruiting workshop like we've done in years past summer. So we'll cover a lot of these topics as well, but super helpful, Matt, on that point. So Andrew, do you want to ask your question really quickly? And then we'll go to the last set of questions that I have. Maybe just do a quick background, what firm and school, et cetera.
I'm going to be going full-time to Doucera and their restructuring and M&A group. And I had a question for Matt, and I kind of wanted to get some more color on the opportunities funds versus the special situations. Would it be right to assume that like the opportunities fund focuses more on debt that's slightly below par, and like special situations might go more even to like the fulcrum security?
I would say that that both have the ability to invest in distressed debt. The Opportunities Fund is kind of Oaktree's flagship distressed debt investing fund, but over the years, as kind of distressed debt hasn't been as prevalent in the market, they expanded that strategy to include structured credit, a bit of structured equity. I will say the biggest aspect of where we kind of dovetail off from the Opportunities Fund is that we will invest straight in equity, whether that could be through kind of a traditional LBO, whether we can own the equity through structured equity, and we'll take a ownership position, whether that's majority owner of the business. And we have a team that sits within Special Situations Group called the Portfolio Transformation Team, where we will have them go in and work with the CFO, COO, and help drive value creation at the C-suite and within the board of directors. So I would say that we take a bit more of a active position on what happens post-investment versus the Opportunities Fund.
Great. Thank you, Andrew. Thank you, Matt. Jean-Pierre, we'll try to get your question in a minute, if time permitting. Madison, anything else you want to kind of tell the audience on recruiting, whether it's related to, I think you've already covered a lot of it, but anything before I go back to the panelists and ask them a few more questions around backgrounds and things like that?
I mean, honestly, I think you've been incredibly thorough here. Okay. The one thing I'd say is we're not only open for recruiting conversations at one time in the year. So feel free to build relationships in advance of recruiting with us. We'll ultimately probably refer you to Oxbridge to go through the on-cycle process. But I mean, if you want to start talking to us now, great. It'd be nice to get to know people, build our pipeline, and understand what you're working on and what you're interested in, so that we can help and set a realistic expectation for if Oaktree is an option for you.
Super. I mean, that's an amazing approach, because I think different firms have different views on that. There's kind of 3 or 4 different types of backgrounds, and I would love to give you your advice. So Carl, Matt, and Tejas, let's say you're coming from IB Classic, right? So your classic, whether it's industry group, et cetera, or let's say you're coming from LevFin, or let's say you're coming from restructuring, or let's say you're coming from like consulting or something, ancillary to that. How would you sort of position yourself to sort of take that experience that you have and then kind of translate it to kind of the skill set that they might be looking for if credit is an interest for you, right? Does that make sense in terms of like the advice you have for people of different sort of backgrounds on what things they should highlight in their profile in order to sort of, highlight that they'll be a good fit for credit careers, right? So maybe I know it's a little bit of a tough question, but anyone can take this.
I'll give my quick answer. I mean, for myself, I might not be best equipped to answer this question, just given I came from a LevFin background, and I personally, I feel like LevFin to private credit in particular is probably a very vanilla transition, given it's essentially the same work, just with a slightly different client and a slightly different perspective on businesses. So, I will say it was a rather smooth transition for myself. But, if Matt or Tejas want to take it from like the coverage banking perspective to credit, I'll let you all run with that.
Yeah, the funny thing is, Carl, I wasn't even, really like I was in a capital structure advisory group. I mean, we did do some M&A. I did do one M&A transaction while I was at Moelis, but mostly did a lot of like capital raising activity. The thing that drew me to Oaktree, honestly, was we did a lot of transactions where Oaktree, we were showing Oaktree deals, or Oaktree was a part of the process in some way. I think most of our deals we did show to Oaktree, and the level of thought and how Oaktree thought about, deals, how they thought about structuring, when they chose to bid, when they didn't choose to bid, was incredibly insightful for me. And so I was able to communicate my interest with, other credit shops and pref equity shops and what have you, that I met during my banking days, but also like, just being able to say, I remember exactly what you said on this deal because it's in my notes. And that I think, and I told, the guy I was interviewing with, who we'd shown an ad tech deal to, I said that was the crux of the entire deal that ended up like driving the valuation, that ended up driving, what the CEO thought about, and getting his actual thought and opinion on that driver was incredibly insightful. So that was like a big part of the reason that I was attracted to Oaktree.
I think one thing I'd actually add to that, which I forgot to mention, is that if and this is from more of the bulge bracket banking perspective, if you're joining a bank as a coverage banker or a left-fin banker, et cetera, you will still be involved in a number of parts of different types of transactions. And like, Matt can probably speak to this, but when you do a left-fin deal, the coverage team is still involved, right? So they'll still have, a very much firsthand seat to, the underwriting process, the committing process, the syndication process, et cetera. And even if you're in like a financial sponsors group or a coverage group, I think what's important to do, as an analyst in banking is still try and have a perspective of an investor. So think to yourself, okay, my job is to sell this business or find a sponsor for this business. Think, if I was a sponsor, would I want to buy this company? Why or why not? Right? Or if I'm, if we're helping, I don't know, a sponsor acquire a business, think, okay, if I were a credit investor, would I want to buy this debt? Why or why not? Or would I rather have the debt or the equity of this business? Why or why not? So as you start to kind of practice and flex those muscles, that'll kind of help you develop that investor framework. That's going to translate a lot into your interview process. So
amazing. Great answers, guys. I think what Carl and also Tejas hit on is the investor mindset that we're looking for on private equity, right? So can you take a deal or project or any idea or any company that you're pitching to us and tell us why or why not that's a good investment? And if so, like, how would you evaluate that? So I know we're up against it at 3:30. We want to be respectful for all of our panelists' time and everything. So I think I'll kind of end with this. Obviously, reach out to Tejas, Carl, or Matt if you feel like they've made a positive kind of impression on you and you want to ask further questions. Reach out to Madison to express your interest, obviously, in Oaktree. I mean, Oaktree team, you guys have done a tremendous job. I know also our audience, we changed the time from noon to 2:30, so it's still great to see like 200 people turn up on a Friday afternoon to do this. Any final words of wisdom, guys? And I'll have the Oaktree teams have the last word for our group of, given how early some of these on-cycle processes are and so on. It is a lot of sort of incoming bankers and so on. So any words of wisdom that you have as we kind of send them off to their banking programs, and some of the folks are also in their current banks now looking for off-cycle stuff. But any final words of wisdom that you have for our audience before we end the session?
Yeah, I'll just start by saying just be patient. I think there were opportunities and offers that came up to me before I went on cycle that don't even compare to the seat that I'm sitting in now. And so I think really being mindful and thoughtful about the firm that you're joining, and don't think that because you don't get something within kind of your prescribed timeline that the right opportunity is not going to pop up. So keep your head down and continue to be patient. And I promise something will fall in your lap.
Amazing.
Yeah. The two pieces of advice I'll give, and I give this on most calls. So one is really if you're in like a banking seat or, some kind of sell side seat, really give it a chance. A lot of people write it off as just like a stepping stone. The chances are some of you are going to be top quintile bankers. You're just phenomenally good at it. And, your level of impact in your entire career is going to be maybe greater if you're a sell side guy. I mean, the people at the top of like the great sell side houses, like the tremendous bankers, gained so much experience, so much network, so much knowledge throughout their years. So really give it a chance and make a conscious decision when you decide to recruit. Don't do it because everybody else in your class is doing it. Don't do it. Don't recruit for a certain group because that's what straight up P because everybody is recruiting for P. Just be thoughtful. That's the first thing I'll say. And then the second thing is really like use banking as a platform to network. Banks are in the moving business. Kaushik's spot platform, like plug, this is not sponsored or anything, but it's actually really great because the buy side, if you theoretically didn't want to meet anybody and just wanted to do analysis and pitch at IC, you could do that. But the network is really beneficial for your career in the long term. Use a sell side job to take anyone out for coffee. It could be like you do an M&A deal, the buyer of the deal is on at some buy side thing, and he's the associate that you've been sharing the diligence tracker with for like 6 months. Go get coffee with him, go get drinks, and use your platform and the place that you work as an opportunity to just meet people. And honestly, your MDs will appreciate that because they might have their relationship with the head of whatever buy side firm, but then you'll have your relationship with the junior guy as well. And they really, really value that. That's like an instant way to set yourself apart from your peers. So that's my 2 cents.
And
Horl?
I'll just add, to piggyback off of that, I think what Matt and Tejas said are both phenomenal. Matt saying, be patient. Absolutely, Tejas. I think people tend to forget that investment banking can still be a phenomenally rewarding career and not write it off. I think a lot of people tend to just, follow the pack and follow the crowd and kind of move on without thinking about what kind of person they are from a work perspective. So, definitely consider different roles at investment banks as well. And I'd say lastly, on top of being patient, but really, do your best to be true to yourself. Choose an investment strategy, choose a role, choose a firm, because that's the best fit for you, not because it's the best fit for, the three kids who happen to be sitting next to you on your desk, right? So make sure that you choose a strategy that you are genuinely interested in, intellectually curious about, because that is going to enable you to be a lot more successful in your job. The less it feels like work to you, and the more it feels like something that's genuinely interesting. And you can find a lot of your own success, but be patient, allow things to work for you. And lastly, I'll say things always have a way of working out for the better. So just, trust the process and allow things to fall into place.
Great, guys. Well, I think I couldn't have said it better, right? Patience, networks, they just highlighted on that. That's the biggest asset you have in your careers, right? Your experience in your networks. And then Carl, to your point, on just introspection and really understanding what drives you, what are you really good at? Because your career, right? Everyone, and you've heard me say this, and every single campus in the last, 3-4 years is an intersection of what is your unique skill set? What are you, really, really interested in? And then what do you define as impact? So if you can find those 3 things over your career, you'll be exceptional at it, right? So with that, thanks everyone for attending on a Friday. Madison and team and Carl and Matt and Tejas, really great job of representing Oaktree, as well as anyone could. And so really great job, guys. We look forward to following you guys over the course of your career and Madison as well. And everyone on the call, thanks for your interest in credit and Buyside and Oaktree. Thanks for attending, and we'll see you at the next event.